Welcome to the Daily Exchange. We're here talking with the CEO, Trevor, of Polymath. Talking about also a big update on institutions entering in the cryptocurrency space and lending with cryptocurrency. So see you guys right after this. We've got Trevor. Trevor's going to come and have a chat with us as well. That's kind of cool. Very cool. We've got a little bit of a... I think, you know what? I think we've played this disclaimer so many times it's not even funny, but you guys probably want to see it again. Let's go for it. All right, guys, welcome back. We're here with Trevor. I want to introduce you. He is Trevor Koverko, CEO of Polymath. Welcome, Trevor, to the Daily Exchange.
Good to be here, Joel. Great intro. I'm fired up.
Obviously, you've created Polymath. It's an incredible blockchain platform. And just a bit of history for everyone. The ICO was back in 2014. Obviously, it's about disrupting the security tokens, the security industry, and really bringing that to the market. Sorry, you founded, my apologies. You were an investor in Ethereum when the project ICO'd back in 2014, and you founded Polymath in 2017. My apologies. Which is a great platform. We've got a little video, obviously, to talk about, but while we spin that video, do you want to just give us a bit of background about what Polymath is and how it came about in starting it?
Yeah, absolutely. We got started almost 2 years ago now. I was actually running a private equity fund, and I woke up one morning and decided I wanted to tokenize it. And this is before the term security token even existed. I remember we were debating about whether to call it security token or securities token, because security sounded a little bit kind of like web security or something. But yeah, that was the good old days back in kind of 2016, 2017. I actually got into crypto well before then. I bought my first Bitcoin in 2012 on eBay, of all places. And that was, I do not advise that's where you buy your Bitcoin today. There's better venues, but that's kind of how I got my my training, and I fell down the rabbit hole, and that was kind of my gateway drug to the whole space. So after that, I started investing in a lot of token projects and equity projects like EOS and Shapeshift and probably a dozen others, and just kind of exploded. The whole space exploded, and I kind of held on for the ride. And then halfway through kind of that mega trend is when my private equity company was going to be tokenized, realized it was really hard to do so, and Polymath was kind of born out of that problem. Instead of launching on another platform that's not designed for security tokens, we decided to build something custom for asset-backed tokens, and that's kind of how Polymath began.
Very cool. So, in terms of the Polymath, it's really creating this standard called the ST20. We've got the ERC20 and the ST20. Do you want to give us just a quick explanation of the difference between those two?
Yeah, we love Ethereum. We were very close with the Ethereum founding team. I know most of the Ethereum co-founders pretty well. And we love them. We love what they've done. We love the standards that they've created, such as ERC20. A lot of our technology is predicated on Vitalik's technology layer 1 solution. And what we decided, though, is that securities are a little bit of a different beast. Like when Vitalik was a little boy, he didn't necessarily dream of optimizing securities regulations and online regulation technology. But we said, hey, maybe there's a way for us to not only create a standard, but basically do what Ethereum did for ICOs, we want to do for STOs. We want to be kind of the platform that any security token project goes to first to launch their own fundraise or their own token sale.
Very cool. Trevor, are you able to come a little closer in your microphone or just a little bit further? Sorry, man. Thank you so much. It's obviously very exciting stuff, and obviously our regular viewers right now are talking a lot about security tokens, which is really, really cool. You know, we've got a couple of videos here, Joel, if you want to spool them up as we're going along. We're talking about STOs on the show. Would you want to give us just, I guess, I'm keen on your sort of 20-second explanation of an STO or a security token. What is a security token?
Yeah, perhaps I should have started with kind of the terminology. So a security token is really simple. It's just a token that represents ownership in something. A little bit different than a regular token or a utility token, as we call them. So that would be things like Ethereum, Bitcoin, Ripple. These are all utility tokens. And what those represent really is access to a network or a protocol. And there's nothing wrong with that. We were very bullish on protocol coins, but we also see kind of a new emerging trend of real assets getting tokenized. So these are, stocks, bonds, real estate, and everything in between. Anything that you can physically own as an investable product, we think they benefit from tokenization and becoming, denominated in tokens instead of shares or LP shares or units or anything like that. So we're really excited about this new kind of subsection of the crypto universe, which is asset-backed tokens emerging. And we actually think this is where all the action is right now. You can see utility tokens are down 60, 70, 80, 90% this year across the board. I think the pendulum swung a little too far in the other direction, just like it swung too far in the frothy direction. But that's just one part of the story. If you look at security tokens as an asset class, I would estimate they're up 10x this year. And nobody talks about it because it's such a small market still. But you can see we're kind of right at the inflection point now, just like Ethereum was. Like Ethereum, I always talk about how if you look at the market cap chart of tokens, it was really flat and linear until Ethereum arrived, and then that was like the hockey stick moment when the exponential growth happened, because Ethereum made it easy for anybody to launch an ICO. You didn't have to be like a PhD wizard or anything. You just had to be a developer, and that was pretty cool. So what we're trying to do is take it even further than that, and we're trying to make it easy for anybody, not just developers. Just point and click, drag and drop, create your own asset-backed token in minutes, and that's kind of our vision from the beginning.
That's really cool. So yeah, talking about Polymath, who is currently using Polymath right now?
So yeah, the history is we had a lot of hype when we got started, and it was kind of, to me, more about community building. So even though it was a little bit crazy and a little bit frothy across the board, we kind of channeled that into building our community, into building our user base. We had at one time the biggest Telegram group for crypto in the world. We actually broke the limit. They had to raise it, and I think part of that is a bit of a vanity metric because a lot of it was just kind of people looking for quick flips and whatnot. But to me, it's all about the community, and a decentralized network literally is how robust and engaged the community is. So that's the first thing. The second thing is how can we translate that community kind of into engaged users? And that's kind of the phase we're at right now. And we were very proud to have literally thousands of businesses, not just people, but businesses sign up. And they came and they said, hey, I have this idea for my gold coin, my real estate coin, and I want to launch on your platform. This is exactly what we needed. And we were very kind of, as an entrepreneur, I get very excited when the demand is not the bottleneck. And for us, it certainly wasn't the case. And the last year of our business's life has been about processing that demand and channeling that into to real users. And we're proud to say that we already have 30 tokens, soon to be 100, because we already have some kind of next in line projects ready to go, already launching security tokens on our platform. And this is not us doing sales calls. This is not us doing outreach. This is all inbound unsolicited leads. And these are people that have gone through the process to actually create a security token on mainnet. So it's not like a SaaS platform, like sign up for your email. It's a little more layered than that. You have to use MetaMask. You have to integrate with the mainnet Ethereum network. So we're really proud that we've got a lot of really excited users ready to kind of go through the process. And every day we're making the process even easier and faster and more intuitive than it is now.
So you said you've got 30 tokens that have gone through the process and built their token. Is on Twitter last week you said there's another 100 coming up. What does that actually mean that they've... Can you describe the process that you go through with Polymath?
Yeah, it's really simple. You go to our DApp. It's just polymath.network, and it starts with naming your token. Just name your baby, and you pick a ticker name, just like the stock exchange has tickers like Apple, I think, is APPL, and so on. So we had the same kind of system where you pick your ticker first, and after that you go through the process of actually customizing what your token is, what it does, what the parameters are, what your investors will look like. We have whitelisting technology that allows each token issuance to be compliant, and that's the real difference between an STO on Polymath and a regular ICO, is that you can do it in confidence, knowing that you are able to follow your local jurisdiction's securities laws. And that's very important, because if we're ever going to access the trillions of dollars of institutional capital, we have to follow the rules. We have to be by the book. And to do that, we were forced to innovate around this concept of making sure that non-authorized investors programmatically can't hold security. They can't hold a security token. So that was part of kind of the core engine of what we built. And now we're kind of in the phase of putting a front end on that and making it really user friendly.
So, Trevor, do you have any plans to release tokens and standards for jurisdictions outside the US?
Absolutely. And I'd be lying if I said we didn't focus on the US first. That's strategic, because I think the US has the most rigorous securities regulations and robust. And we thought, let's just go with the hardest one first. And a lot of the world kind of seems to follow the SEC's lead. But with that said, Polymath is a global first platform. And I like to think of us a lot like Ethereum. We were inspired by Ethereum. And Ethereum didn't say, oh, this is a Canadian, Ethereum was just created in my backyard right here in Toronto. And Vitalik, I don't even think lives in Canada anymore. So the point is, we build the technology just like Ethereum does, and anyone can come and use it. And we're trying to make it easy for them to use our tools to customize it for their local jurisdiction. If you're in Australia and you want to do an Aussie issuance of a security, we'll give you the tools that you need to make sure that it's compliant in your particular jurisdiction. And it's not just jurisdictions, it's where your investors are from. So you have to, as an issuer, make sure that you're keeping track of that and only allowing authorized investors in the deal. And that's something that we're really excited about kind of pioneering.
Makes sense. So we're talking about the actual Poly token itself is an ERC20 token. Do you have plans to launch your own mainnet?
Yeah, this is a really great question. And I think, again, I'd be lying if I didn't say we weren't interested in that process. We don't take that lightly. Building a blockchain is a big, scary task. And yeah, I think we're very interested in doing what's best for our users, and we have a lot of interesting projects on the shelf and R&D that we're excited to work on too.
Makes sense.
To add to that, when Ethereum launched, and when we launched, Ethereum is an obvious choice as a layer one solution to launch on top of.
Right.
And to me, it was a strategic decision. I had the resources and the contacts, build a dedicated chain, purpose built from scratch if we wanted. But for me, it was all about winning the market, and it was about first mover advantage. And it was about kind of building that network effect, getting the most issuers and the most investors on the platform before anyone else. So strategically, we thought it would be best to launch on something that's turnkey out of the box. And Ethereum has been a fantastic option for us in that respect.
Makes sense. Just talking about the tokenomics of Poly and the token itself, How does Polymath token, I guess, gain value?
Well, the token will gain value the same way anything gains value. It's just supply demand. But I think what you're getting at is kind of the utility of the token and kind of why do people want to demand it other than to speculate. And that's kind of what I set out from the beginning with my team was, how can we create fuel for the network that people need to access it? To put it a different way, how can you build a platform that's so necessary that whatever payment gateway you put on top of it, people will pay it to use it. You can look at a coin like Binance. Binance coin at the time, it's not too fancy, right? It just gives you discounts and payment gateways for the Binance platform. But Binance is so big and so good that everybody wants to use it, and now it's $1 billion coin. So for me and for us, it's more about how can we create an architecture whereby the ecosystem functions in kind of a circuitous motion where the tokens flow from the issuer to the service provider, to the KYC provider, to the investor, and we have kind of a self-perpetuating cycle. So
just so I understand the utility of the Polymath token, is it used for the transactions on the network, or is it used for what is it actually used for? Can you just describe that to our viewers?
Yeah, so if you want to issue a Poly token as an issuer, you have to pay Poly, and that's something. This is kind of the fuel for our network. It's how you access the Polymath network. We're also looking at some interesting models around staking, and like you said earlier, some other kind of interesting layer one storage and computation purposes for Poly token as well. Another thing is that we encourage our issuers to raise their round in Poly, just like ICOs usually raise in Ether. That's what we part of our raise within. So we encourage that as well, and we think just like ETH is the currency for ICOs, we're aiming to have Poly become the fuel for STOs and the currency for STOs.
Very cool, and cool. And then with the STOs on using, I guess, on the Polymath network, will they also accept cryptocurrencies as well, like other cryptocurrencies, or only Poly?
No, we right now you can choose fiat, you can choose Bitcoin, Ether. Right. We want our issuers to kind of choose what currency they want, and we can have different kind of incentives for them to choose Poly because we think that is the best option for them, but we don't prevent them from using other alternatives.
Very cool. Just moving on to talking about exchanges and STOs, there was a rumor that you guys purchased tokens.com, which currently is registered as a domain name to you guys. There was a rumor going around that you potentially were going to launch an exchange. Can you sort of confirm or talk about that? Are you guys looking to build an exchange?
No, that's out of my pay grade. We know what we are and we know what we're not. And I like to put it this way: Polymath is more of an on-ramp to the blockchain for businesses, and an exchange like T0 would be an off-ramp. So that's how they get off the blockchain back to fiat. So we're more focused on the front end, which is kind of the issuance side of things. We do own tokens.com. That is true. I acquired that in Q4 of last year, and we've got some exciting plans for that. It's still under development page if you go to it right now, but no, we're not going to be building an exchange anytime soon. What we are going to be doing, and this kind of bakes into our overarching strategy, is we're going to hook into exchanges and we're going to let them be the liquidity layer. And our standard, what you mentioned earlier, ST20, is going to be backwards compatible with all the top security token exchanges that are coming online right now. That's one of the biggest bottlenecks to the security token universe right now is exchanges, is liquidity. If you can't get secondary trading on your token, then it takes a big reason to do it in the first place away. So we've invested in a lot of our friends that are launching security token exchanges. In the US, you need what's called an ATS license to do it legally. And there's been several that have been handed out. So we're very excited to see what happens there. We also did make a strategic investment in a in an exchange ourselves that we're a little more hands-on with, but it's more of a learning experience to see how we can integrate our tech into every exchange much better.
Makes sense. And in terms of security token exchanges, just moving on to that, there are some really interesting ones launching. We've got a Florida-based one, Series 1. We've got the Malta Digital Exchange. We had Rick on the show the other day. What's your take on security token exchanges? Do you think they're the future?
Yeah, I absolutely do. I think that's going to be the biggest Q1, Q2 mega trend that we're going to see, is that licensed exchanges that trade security tokens will be coming online. You can mark my words. I see it every day. And it's not really a technical challenge like the order book and the matching engine and all these other technical things are already solved. It's more of a regulatory challenge and getting clarity and guidance there. But yeah, mark my words, definitely by this time next year, there will be, several, if not dozens, of security token exchanges giving much needed liquidity to the thousands of security tokens that will be floating around by then. And by the way, I think, this is going to overtake the rest of the market. Security tokens are such a massive place that, to me, it's just inevitable when they become a bigger slice of the pie than utility coin, because it's just mathematics. If one major, New York hedge fund decides to tokenize, that would double the entire crypto market overnight. That's just one fund. So, and then that's not even talking about anything with derivatives or anything with money markets or anything with equities. So to me, it's just kind of a slow but kind of steady linear growth curve now. And we're just waiting for that kind of inflection point when Polymath hits critical mass, when the exchanges come online, when custody gets sorted out, and then we can expect to see some really exciting exponential growth in that department.
Very cool. What do you think needs to happen? I guess just a couple of last questions. What do you think needs to happen, I guess, to get more adoption, like get existing firms to more adopt security tokens?
There's a reason there's not a ton today. It's a hard proposition, and we knew that coming into this. There's all these regulatory considerations you have to have. There's the lack of infrastructure built that makes it harder to kind of get traction right away. Where if you launch a utility coin, you can raise money quickly. You might not have to register it, depending on what kind of advice you get. There's lots of different ways to do a utility token, but for security token, it's very rigid. You are a security. You have to register, file for an exemption. You have to find a ATS licensed exchange to get secondary trading, and it's just a longer process. So I think the answer is that there's just a lot of headwinds and a lot of roadblocks. But the reason I think a lot of the smart money is moving towards security tokens, and I think a lot of the chatter, if you go to conferences these days, at least half of the conferences around security tokens. And this is nothing to say of our existing utility coins going to be retroactively classified as securities. That's a whole other discussion. I'm just talking about new inventory coming online. So I've been saying this for a few quarters now, and people kind of see me, talking about this very loudly, and I'm going to continue to do that because I'm in the weeds and I see it every day. The emergence of the security token is going to be a 2019 story, and I'm very excited about it.
Very cool. I guess just wrapping up, I know other than Polymath, you advise a number of different tokens and a number of different projects. Do you have any sort of favorite projects other than Polymath that you're interested in?
Of course, yeah. I'm very lucky, and Polymath is very lucky to have such a great team of advisors. And I like to give back. I do believe in karma, and I think if we got so much help getting going, and we had people like Matt Rozak and David Johnston and Eric Voorhees, they all kind of helped advise me and give me advice when I needed it. So now when new projects come along, I try to help out whenever I can. And geez, some of my favorites, putting me on the spot, but I got to start with Canada because I'm a proud Canadian, just like Ethereum is a proud Canadian project, at least at the beginning. And I like Shift, that's SHYFT. a good close friend of mine, Joe Weinberg, I think is very talented. And they're not launched yet, but that's a project to keep an eye on. Aeon as well. They are a very well-known crypto project also out of Toronto. And they're kind of an interoperability layer between dozens of chains. And very excited about that. A lot of good traction in Asia and elsewhere globally. So very proud of Matt Spoke and the team there. Nexo is a very hot project right now, actually, and they deserve it. They built lending technology in a decentralized way from scratch, and they're doing a great job. Let's see, can I do one more here? There's a couple under wraps I can't announce quite yet. Let's see. I got to just say Ethereum. I'm such a fanboy of what Vitalik and the team did, and Anthony Diorio and Gavin Wood and Joe Lubin. Like, these guys are all legends and titans in their own right. Charles Hoskinson, huge fan of him. He's been an inspiration to me since day one. He was kind of part of that Ethereum mafia coming out of Toronto in the early days. And I just admire how resilient all those guys have been and creating their own projects and sticking in the community, and not, if there's been some turmoil here and there, but like that's kind of what I love about crypto, is that people that were there early on, we kind of get nostalgic about the good old days, when we were all living in our parents' basement, going to conferences on the weekend back in like 2013, 2014. And we were all there. We were there for the right reasons, and no one was there because no one was making money back then. So I like to kind of surround myself with the guys and girls that were there in the early days. And we love the new people too. We love, especially the new smart people from Silicon Valley and Wall Street, and the venture capitalists and the private equity guys coming over. I think that's awesome as well. And the brain drain from the real world, or the legacy world, I should say, over to crypto is a reality, and we're the benefactors of that with some of our kind of executive bench strength that we've added. So yeah, I just can't be more optimistic about where we are in the cycle. But we're not a project that looks at the price of tokens that's very short term thinking. We're in the very early innings of building out layer one, which is the protocol, building the infrastructure on top of that to eventually make the applications that we're not quite ready for flourish, the decentralized applications. So we're still kind of layer one, layer two, figuring that out. And it's going to take many more years before we get to where we want to be. So I think everyone should just be patient and optimistic, and keep kind of your heads down working. You should be not in Toronto. You should not be in Australia. You should be in Prague right now, because that's where DEF CON is getting hosted. And I'm a little ashamed I'm not there. But it's so refreshing to see some of those talks. And no one's talking about fundraising, no one's talking about their token price. No one's talking about is Ether going to 500 or 200 or 50. No one cares. Everyone's just focused on the technology, on what's Ethereum 2.0 going to look like. Is it going to be proof of stake? Is there going to be sharding? Is there going to be the scripting language? Is that going to get upgraded or changed? And those are the kinds of discussions we need to have, like very technically focused discussions. Also design. I think that's a big need in this space that's been kind of neglected, to my point. I'm so kind of embarrassed at how hard it is to use decentralized tech. It's just kind of a joke. I mean, of course no one's using it. Like, look how hard it is to use. I can't use half this stuff. So I think we need to think a lot more about user experience. Steve Jobs always talked about, building the product form and then backing into the tech. So that with the iMac, he famously said to his engineers, here's what it's going to look like. Here's the box, work backwards. And I think crypto could use a little bit of Steve Jobs when it comes to product design.
Understand. Trevor, just finally, in terms of, we ask everyone who comes on the show, and thank you for joining us. Final question. It's 12 o'clock, midnight on December 31st, New Year's Eve. What would you think? What is your prediction for the price of Bitcoin?
Oh, geez, this year. That's my lawyer being like, like, do not answer that question. No, I'm just kidding.
This is not financial advice, by the way. No financial advice.
I'll say this. I'll say this. I'm very bullish about crypto in general, and dare I say, kind of the price. And the reason I say that is not because I think you should buy it or speculate on it, but because I'm observing that the rails from institutional money are a lot more advanced than they were in the last bull cycle. So when the sentiment changes, I think it's going to be a lot easier for a lot of capital to flow back into the space with kind of exchanges and OTC markets and all these kind of pension funds and hedge funds and family offices now have a lot easier way to get into it. I think the next bull run is going to be institutional. The first bull run was retail, and us little peasants all got the market up pretty good, but that's nothing compared to what the big boys and girls are capable of on Wall Street and Silicon Valley. So that's my answer from a macro perspective. From a micro perspective, gosh, do I have to say Bitcoin?
Go for it.
All right, Bitcoin. I think, everyone is saying it's going to be like a quiet Q4 and it's just everyone's to sleep until after Christmas. I don't think so. Last year, I remember Christmas was crazy. So I think we're going to get a nice bull run, and Trevor Koverko predicts $10,000 Bitcoin by New Year's Eve.
Done. Trevor, thank you so much for joining us as well on the Daily Exchange and telling us all about Polymath and the incredible project you are putting together and helping drive forward the security token industry. Really appreciate all the efforts you are building in the market, and all our viewers are very, very thankful for the work that you do.
Hey, thanks, Joel. My pleasure. Happy to do it again anytime.
See you, Trevor. All right. We are talking now about moving on to talk about cryptocurrency and the loans space when it comes to. Trevor was talking about Nexo there. Just to give you guys a bit of a high level. So what's happening with cryptocurrency and loans is the borrowers can stake their cryptocurrency, I guess someone, and then they get paid cash, and they'll have to pay obviously interest and things like that back to the service that they use. Now, what this is allowing people to do is to hold on to their cryptocurrency, but they can access cash. And so obviously you can keep your holdings. So potentially, obviously, as the cryptocurrency potentially could make a massive rise up, but you can also get cash to access and use the money that underlines and underpins that. Now, you can get margin called. You can, if the cryptocurrency does fall down too far, that cryptocurrency will get sold. And it does depend. There's a number of different aspects to this, and we'll talk about how that sort of fits together. I guess if you choose to, there's another aspect to this is if you choose to lend your cryptocurrency, you can also earn rewards on your holdings, which is kind of cool. Creating an additional source of income. So it doesn't matter really how the market moves. The other thing about cryptocurrency loans is that there are no credit checks currently. And the reason for that really is because you are staking the coins up front. So the actual collateral is already there. So the lenders already know what you have. And I guess people who have been experiencing loans and poor interest rates in the past, even though they have the collateral to pay it, this can be an alternative way where they can get a much better interest rate. Now, Finder has gone ahead and put together a cryptocurrency loan comparison. Joel, if you want to bring this up, so you can see here comparing Bitcoin loans and lending services. Now, I want to take you guys through a number of these different aspects and a number of different elements, the different services. So we've got Cred and Nexo and things like that. We'll just talk about Cred to start with. So Cred is very interesting because it's obviously loans secured by the cryptocurrency. They're available in fiat, so you can get paid US dollars or USD Tether. And Cred will give you an extended line of credit determined by the value of your collateral, essentially. What that means, so say you put $1,000 of Bitcoin, but actually receive something like 20. You could potentially receive more than that. So actually, you get more than the $1,000, which is quite interesting because it's much like a traditional loan, although you are still collateralizing some part of it, which is quite different. Whereas with Nexo, these products are you can see they're around the 8%. If you're paying the loan with Nexo tokens, or around 16% if you are not using the Nexo token to pay back your loan. Now with Nexo, there are dividends as well. This is not financial advice, but you can receive dividends from owning the coin and staking that. And I believe on the 5th of December is when you need to stake your coins with the Nexo platform if you are holding on to those Nexo tokens. So do stake your tokens to get your dividends if you do have them. That is, you put them onto the platform itself. So essentially with Nexo, if you were to deposit $1,000 of cryptocurrency, you will get around $500, say for example, maybe 50% of cash sent back to you. So you can access that, which is quite incredible. And obviously the thing about these loans is they are approved immediately, which is kind of cool. We've got another one here. You can see we've got Lendingbook. I'll just come down here, which is really a peer-to-peer lending platform, very different from Cred or Nexo. So rather than lending fiat for crypto, Lendingblock offers peer-to-peer cryptocurrency loans. This means that borrowers can borrow one type of cryptocurrency by depositing another. So obviously lenders can leverage from long-term cryptocurrency holders, earning rewards in the process. For some, this can be considered preferable, obviously, because you're leaving funds on an exchange, obviously, to leaving funds on an exchange or in a wallet, which is just basically, collecting digital dust. Lending crypto for crypto might seem strange, considering that most people use an exchange to swap cryptocurrencies for another. But Lendingblock obviously claims that institutional demand for this type of product, including brokers, funds, and exchanges, will be very big. So you've got sort of swaps there, really, where you can still hold on to the other remaining coin. And there's all sorts of different financial moves which they can do. Obviously, as consumers trade, for consumer traders, considering the following, a trader might think XRP is about to have a bull run, and thus you want to get more of it. They've got Bitcoin, but they don't want to trade it because they think that Bitcoin will also increase. By leveraging their Bitcoin to borrow XRP, so which is not Ripple, by the way, you can obviously gain the value of both of those assets, or losses, that might be. Again, not financial advice. In terms of professional traders, they might be attracted to this product as it allows them to obviously multiply their capital, similar to the way that they may trade margin on an exchange. Just going down to the pros and cons of this, you can see obviously there's a lot of quite a few different benefits. No credit checks, quick sign up, fast access to funds. You can obviously find loan terms that suit you, get extra income potentially, and you can obviously diversify your portfolio. Some of the risks, obviously, there is not exact legislation or regulation around this. Obviously, you're extremely exposed to the cryptocurrency volatility as well, and careful, obviously, as general with everything, be careful of scams. And borrowers potentially defaulting on their loans could be a major issue, although you are holding their cryptocurrency. So it seems kind of, it's important, I guess, to check the actual process and the system that's actually doing this. We've got obviously fees involved and interest rates, and obviously prices could potentially rise with that. So interesting look at this market and the cryptocurrency space, potentially, I guess, from the perspective of lending. And I do suggest, obviously, you guys do your own research on this. It's a very, very interesting market space. But Nexo currently is quite a performer right now in the market. You can see it is definitely something which is coming up because of that dividend payment potentially on the 5th of December. I guess there's also other parts that are making waves. We've got cryptocurrency loan lending services. Salt is now accepting Doge as collateral, which is really interesting. In true Doge style, Salt made the announcement with only 2 words and a picture. I'm not sure if, Joel, you've got that picture for us. Such wow. I don't know why, but that meme always gets me. Joel, do you like the Dogecoin meme?
I love it.
Is that your kind of
I
thing?
absolutely love it. Yeah, I absolutely love it, Fred. It's one of my favorite.
So Sol has so far issued more than 50 million in cryptocurrency collateralized loans. It also offers Bitcoin, Ethereum, and Litecoin, making Doge the 4th coin to be supported. In other news, BlockFi is now lending worldwide. BlockFi is a US-based lending platform and offers loans that are collateralized using either Bitcoin or Ether. Joel, if you want to bring up the BlockFi, yeah, BlockFi now lending worldwide. BlockFi is kind of cool, US-based lending platform. Loans collateralized using either Bitcoin or Ether. This week they announced their decision to go global and offer their services worldwide. They said the decision was partly informed by the fact that in their Q3 of this year, roughly 50% of their traffic came from overseas sources, with 1/3 of applications showing the same trend. Really interesting. BlockFi really on the growth there. The platform now offers its services in Spanish and Mandarin, likely reflecting where those search queries are coming from. BlockFi estimates that the international market for borrowing USD weighs in at a whopping $11 trillion, which is kind of interesting, right? So a lot of people are getting cryptocurrency and then they're potentially borrowing to get US dollars. In other news, Nexo is now accepting XRP and stablecoins. Wow. So you can actually borrow against your stablecoins. You can borrow against your XRP. I don't know how long it's going to take until I don't make that mistake, but for some reason, Ripple and XRP seem to be very, very, very closely aligned to each other. You'll never know. It's going to take a long time for that to play out. Yeah, I guess in terms of Trevor, obviously is an advisor who we had on earlier. In recent weeks, Nexo announced that its first lending platform to introduce XRP collateralized loans and allows users to borrow fiat against XRP holdings. I just want to bring up here's the tweet from Nexo, which is kind of cool. Kind of cool. People who are holding on to XRP. Now, Nexo is actually currently now supporting 21 different cryptocurrencies. In this week's announcement, Nexo now offers a new product involving a variety of stablecoins. They can deposit those stablecoins, Tether, Gemini Dollar, or DAI onto the platform and receive up to 6.5% interest on them. 6.5% interest, that's pretty good. That's pretty good. Obviously, as well as earning interest daily, the platform also offers one-to-one conversion guarantee, which means that any stablecoins stored with Nexo can be redeemed for US dollars at a perfect one-to-one ratio. Now that's really interesting. Given that there has been some real confusion and kerfuffle about Tether and all those kinds of things in the market right now, I guess providing that out for cryptocurrencies in terms of them coming back and getting their actual money from the actual coins that they've borrowed, Nexo could potentially be that platform that does that. Yeah, and we have also seen that Nexo has also announced a new banking partner today, which is kind of cool as well. Sorry, Tether has announced a new banking partner. In other news, guys, trading trends, Bitcoin currently is trading. Where is Bitcoin trading right now? Bitcoin is trading at $6,362 on Coinbase Pro. Tether currently trading at 99 cents. And almost with the true USD in exact parity again. It's come back. It was scary before. Scary times in the wild west of cryptocurrency. Bitcoin, obviously the volatility is really low right now, and analysts feel that Bitcoin will either stabilize, trade sideways, or potentially risk dropping lower, which is kind of scary. Google searches for Bitcoin are at their all-time low right now. since May 2017. CoinDesk analyst Omar Godball, love that name, thinks that the bears have well and truly run out of steam and that the 6,000 lows we've touched several times this year mark the bottom. It's kind of cool. I think, yeah, again, he's saying that if we break above 7,400, we could see a real serious rally and rise as well. Talking about Ethereum right now, it's just sitting in just below $200 right now, which is again very interesting. Trevor talked a lot about Ethereum and where it's at. The Ethereum Foundation has also donated $150,000 US dollars to Ethereum Classic. I don't even understand this, but I'm just gonna. This is beyond confusing. The 16th ranked token by market cap, currently changing hands for about where are we at? $9.10, which is really interesting. I don't know why the Ethereum Foundation just donated 150 grand to Ethereum Classic. Joel, how many times have we spoken about Ethereum Classic?
Just way too many times.
Too many times.
Too many
I don't even know. I don't understand this. The two groups could be working closer together after the big disagreement 2 years ago, and they're reportedly working on a Ethereum to Ethereum Classic peace bridge. A peace bridge. Peace bridge. I love that. Which is kind of cool. An Ethereum developer conference, DevCon 4, rolls out in Prague. And one piece of news in particular that's caught our eye is that the first in that private transaction are coming. The first is that private transactions are coming to Ethereum. Private transactions to Ethereum is a big deal. We've been working on this. Has been worked on with professional service firm EY, which is like a big accounting firm. Zero knowledge proof technology is coming to the Ethereum blockchain, which will allow for private transactions. Obviously, using a new token standard, which is kind of cool. And obviously, this might help enterprises not have to reveal private and sensitive data to the public blockchain. Obviously, this would change and allow issuing of tokens to be private, which has been one of the big reasons, I guess, that people have forked and taken Ethereum and made it private and made it their own chain. And this might actually reverse that trend and bring it back to Ethereum. We'll see how that goes. Ethereum currently trading at $199.68. 68 cents. In other trading news, EOS has launched a free wallet, which is kind of cool. Popular Android-based free wallet has announced an EOS wallet that distinguishes itself by charging no transaction fees. Joel, do you want to bring up a little image here, which is kind of cool? You can compare EOS wallets and find out more, obviously, on finder.com/EOS. Finder.com/EOS, where you can compare all of the different wallets. This is a big deal because getting a wallet does cost money, whereas I think this if they're offering free wallets, that'll potentially become the benchmark and the place to get your EOS wallet, which is kind of cool because it's been one of the main inhibitors for EOS getting mass adoption. Big EOS currently trading at $5.33. Polymath, as Trevor was on today, up about 7% today, trading around 29.5 cents. Which is kind of cool. And Tron almost up 1.5%, which is kind of interesting. Tron has released a demo of Tron Watch Market. It's a new decentralized exchange, it says, and will be the fastest DEX ever. We've got a demonstration of this product. Tronwatch.market. Tron Watch Market, welcome to the demo version. We'll enter in here. You can see here, that Tron trading at $5.35? That seems like a lot. That's very, very hopeful for all you Tron holders out there. It does seem quite high. Tron currently trading at 2.2 cents. Binance Coin will now be available for fiat trades on asset brokerage eToro, a move that could shift obviously the BNB market. Binance Coin is currently trading at $9.67, up 1.88%. Doesn't seem to really react to the news, which is very interesting. BNB is only down 62% from its all-time high in January, according to Live Coin Watch. Obviously, this is in contrast to the 87 to 88% drop in Ether or Ripple, respectively. And Binance launched in Uganda recently, heralding both their first fiat-to-crypto exchange as well as their first in the African continent. On their first day of registration, they claim that 40,000 users have signed up. That is a lot of Binance. that is a royal lot of Binance. All right, guys, moving on. Talking about giving an update right now in institutional trading, what is going on and what is... Trevor talked about this in his interview as well. What's happening? Where are we at? When are the institutions coming in? Let's sort of break this down. We'll do a bit of a roundup here. We're talking first about Morgan Stanley. New updated report from the multinational investment bank and financial services Morgan Stanley has labeled crypto as a new institutional investment class. Released on October 31st, the report called Bitcoin Decrypted, a brief teach-in and implications, outlines what it calls surprising developments, including an increase in funds targeting the crypto sector. Wonderful. Morgan Stanley, very bullish. Bakkt, giving an update on that, guys. Bakkt announced that Bitcoin futures contracts will be available for trading on December 12th, which is very cool. You can see there's an update here at the ICE.com website in terms of the ICE. Obviously, the ICE group is one that owns the New York Stock Exchange as well. And remember that the Bakkt exchange is actually fully securitized. So the actual token of the future that you receive is actually the hard Bitcoin, the Bitcoin itself, which is physically settled, which is pretty cool. Update on Fidelity. Fidelity's plans for crypto. The digital asset services president Tom Jessup, appearing on the Unconfirmed and Unchained podcast, revealed that they'll offering for institutional clients will focus on custody and trade execution at the outset versus retail customers, via something like an exchange. So they're really just purely targeting institutional investors and not retail, which is again very, very, very interesting. Goldman Sachs. The month of conflicting reports about Goldman Sachs entry into crypto continues, with The Block now reporting that sources familiar with the matter suggest Goldman Sachs is onboarding a small amount of institutional investors onto its Bitcoin non-deliverable forward contracts, so it's not physically settled. In other news, BlackRock, again a very large institutional investor, the largest asset manager and ETF provider in the world. Asset manager and ETF provider, largest, that's massive, is taking a wait-and-see approach to crypto. CNBC reports that the New York Times Dealbook Conference CEO Larry Fink said, "I wouldn't say never when it's legitimate. Yes." That's cool. JP Morgan, an update there. JP Morgan is set to launch an experiment using Ethereum-based Quorum for tokenizing gold bars. Umar Farouk, head of blockchain initiatives at JP Morgan, says the company is a big believer in Ethereum. That's certainly quite a different sentiment than JP Morgan CEO Jamie Dimon, who has been held to a blockchain, not Bitcoin stance. Wow. Jamie Dimon is getting smashed. He's been getting smashed for a long time here. Recently clarifying some of his criticisms as actually just not giving about Bitcoin, not really giving about Bitcoin. You can see his graphic here. Joel, if you want to bring that up. Here is the man himself. Bitcoin is a fraud, then it flies. I'm not going to talk about Bitcoin anymore. Flies again. I regret making that comment. And then it dumps. And now he doesn't give a shit. That's good. That's kind of good. It seems like when he doesn't care, then we seem to be going in a good direction. When he does care, it's not the key at all. All right, guys, that's wrapping up for today on the Daily Exchange. Thanks for joining us. Do subscribe. Do join us on YouTube. Press the little bell and follow us for all the latest interviews and all the latest news in cryptocurrency from all around the world. And that is the Daily Exchange. Yeah!